is which currency is going to be attractive in the next few months, next few years, and certainly the dollar and the euro are becoming more and more unattractive. Yes, the euro is strengthening as we speak, but I think the reality is that reserve managers are becoming less inclined to invest in the euro and the dollar, and we're seeing other currencies, including the Aussie dollar, the RMB, having more of an attraction as reserve currencies. So I think going forward, although the dollar has been supported by treasury inflows, China in particular has decreased its buying of US treasuries, and that could undermine the dollar going forward. Which currency is the ugliest? Well, you know, when we look at the external positions, the basic balance positions, they're all looking quite vulnerable across the four major currencies, and for that point of view, it means that, you know, it's a relative ugly contest, and if anything, we do see the dollar this year coming under pressure against emerging market currencies, but we see the dollar strengthening against the Japanese yen and the euro over the coming months. So we do see this euro appreciation as being temporary at present. So here are generally our forecasts. You can see we're more bearish on the euro compared to consensus, more bearish on sterling compared to consensus, more bullish on dollar yen compared to the consensus, and Aussie dollar, at least in the next year, we're a bit more aggressively bullish compared to the consensus. And for gold prices, just to finish off, we think gold will end the year about $1,650 per troy ounce.
We think that last year, China exceeded their growth target and the economy expanded by 7.7%. On Friday, we are going to get the data, including confirmation of rebounding year-on-year growth in the fourth quarter of last year. So better days ahead for China. In fact, we think that 2013 will be stronger and the economy will expand by 8.5%. And this will help the whole region. As the Chinese economy picks up pace, so will inflation. And we expect that inflation, which the release that we saw on Friday for December surprised markets by how fast it actually picked up, 2.5% year on year. Inflation will keep accelerating due to stronger growth, as well as base effects and higher food prices. It will reach 4% by the third quarter of this year. So the People's Bank of China will need to do something about that, and we expect 2 rate hikes in the second half of the year for a total of 20 basis points for the lending rate. We also expect measures to tighten liquidity in the money market and therefore prevent too quick rebound in house prices in China.